Well, thank you, Planning Institute of Jamaica, on behalf of the Bank of Jamaica for inviting us to participate in this seminar. We really appreciate the invitation. The situation in Jamaica is that we have had a long-standing challenge in growing above 1%. And indeed, over the last 5 years, we haven't done much better than that. And this puts us well behind the averages for other developing economies and our main trading partners. It's against that backdrop that we face the COVID-19 pandemic. And what I want to do this afternoon is address you in three stages. Look at the impact of COVID-19 on the Jamaican economy, the shock it caused. Talk about the policy initiatives that the Bank of Jamaica took to ensure there was adequate liquidity in the financial system, and then to speak briefly on the growth impediments, the opportunities, and the policy lessons out of this experience. So the pandemic severely impacted the domestic economy, as we all know. It had a very severe impact on Jamaica. Immediately in the first quarter, June, we enacted very strict stringency measures to safeguard the distancing between people. And that had a severe impact on production and economic activities in key sectors of the economy. Indeed, the tourism sector came to a virtual halt at the start of the pandemic. Luckily for Jamaica, we had certain buffers in place. The government of Jamaica had bank balances in excess of 87 billion. Jamaica had gross reserves at the end of February of approximately 3.6 billion US dollars. And Bank of Jamaica's policy rate had been reduced over consecutive quarters to a historic low of 0.5%, and that gave strong support to credit and GDP expansion. These buffers allowed the government and bank to respond pretty quickly and effectively to the significant fallout due to the pandemic. The COVID-19 impact on domestic GDP was quite considerable. We went from expecting growth of about 0.5 to 1.5% for financial year 2021 to our current view, which is that there will be a contraction in a range of 10 to 12% for that same year. Indeed, COVID-19 has resulted in Jamaica's largest contraction in real GDP, certainly in the recorded economic history of the country. The labour market too suffered significantly. We went from an unemployment rate of 7.3% in about January, February of 2020, all the way up to 12.6% by July, falling to 10.7% in October, and moderating even further to 8.9% in January. But we still stand almost 2% above where we were pre-pandemic. The external accounts, however, have remained pretty resilient. Jamaica's current account deficit is expected to stay at a sustainable level of about 1 to 3% of GDP for this financial year. And this has been possible because of strong remittance inflows and also a very notable fall in imports, in particular oil volumes and price, as well as general consumer imports. For the first 11 months of financial year 2021, gross remittance inflows totaled 2.8 billion, which is far in excess of any 12-month period prior to this. The foreign exchange market too has remained pretty stable, devaluing or depreciating by about 6.5% in the financial year 2020-21. And when you think of it, in a year that there was this absolute shutdown, for us to have depreciated by only 6.5%, which is just a little more than 4% of the previous year, that's quite a considerable achievement. Inflation also has remained pretty well behaved at April of this year, the last 12-month period, we experienced inflation of 3.8%, which is pretty low. Indeed, over the past 40 months, inflation has been below 6%, which is the upper limit of our 4 to 6% corridor. And we're coming under that 6%, 38 occasions of the 40, which is a 95% success rate. To the extent that we have exceeded that on 1 or 2 occasions, it's been really due to temporary increases in agricultural prices. Similarly, when we have been under the 4% lower limit, on the 15 occasions that we have been, it's been mainly due to a volatility in agricultural prices, and on some occasions declines in international oil prices. When we look at DTIs, what we see is a deceleration in loan growth, and we can well understand that. At about January, February, just prior to the pandemic, we were steaming ahead at about 18.2% year-on-year growth in business loans. That has fallen to 11% at March of this year. And personal loans were at about 15.3%, and those have fallen dramatically to 7.3%. And of course, the loan book has worsened slightly since the pandemic, but not to the extent that we feel it can't be managed by the DTIs. When we look at the initiatives that BOJ took to ensure adequate foreign exchange liquidity, there were several. Firstly, we introduced the concept of foreign exchange swaps into the market. So we had swaps between BOJ and the DTIs and between DTIs themselves. Of course, we intervened with sales through the BFIXIT system several times in a period. We did direct sales to the energy sector. We reduced the foreign exchange cash reserves that DTIs are required to carry at the Bank of Jamaica, and this gave them greater access to foreign currency. And we provided a US dollar repurchase facility for the DTIs. So if they had US dollar assets, they could come and repo it with us. Total foreign exchange liquidity support provided by the bank since the beginning of the pandemic is approximately 1.3 billion US, or about 9.5% of GDP. Looking on the Jamaican dollar liquidity side, we again reduced the cash reserve held by DTIs at BOJ. We had a special bond buying program for GOG and BOJ securities. We removed the limit on the amount that DTIs can borrow overnight from Bank of Jamaica. We reintroduced a lending facility to the DTIs, reactivated the emergency liquidity facility, and we had a special loan facility to credit unions. We also reactivated an intermediation facility between DTIs. Total liquidity support that we gave to the market was 83.8 billion, or about 4.3% of GDP. So when you add the Jamaican dollar liquidity support to the US dollar liquidity support, it turns out to be quite substantial, well above 13.8% of GDP. Other BOJ initiatives in response to the pandemic was we held discussions and had agreement with the financial holding companies to make only limited dividend distributions up to the end of March 21. So they made distributions only to shareholders at 1% or less of their shareholder register. And we only lifted that in April of 2021. And what that did was allow the DTIs and the financial holding companies to accumulate cash within their organization. Financial institutions, as you well know, also played a big role in seeking to ease the burden on customers. They had a moratorium facility which amounted to about 210 billion at the beginning of the pandemic. At February of this year, that stock outstanding is now about 65 billion, and really speaks to the improvement in credit facilities and the economic situation in the period since the beginning of the pandemic and the end of February. In all of this, the banks also sought to be more assertive in implementing tiered KYC for banks to try to pull into the financial network low risk but unbanked individuals. And of course, we stepped up our initiative to launch a central bank digital currency, which has and will have the effect of being far more inclusive, bringing in a lot of unbanked individuals into the financial network in a digital manner. Growth impediments and opportunities. Let's talk a little bit about that before we close off. I think that one of the clear things is that we expect the recovery in GDP to be pretty strong in the financial year 2021 to 22, and we expect that to be in a range of about 5 to 8%. Thereafter, though, we expect medium-term growth to settle down to about 2 to 4%. We estimate that the risk is on the downward side to Jamaica's long-term growth, given our historical background, but also the scars left by COVID-19, in particular the scars on our educational system that may have severely impeded at least 1 year cohort of students at pretty much all levels in our educational system. What are some of the lessons that we have learned from this crisis? Well, obviously, I think that there is a greater need for financial inclusion and digitization of the Jamaican economy. Just a simple act of trying to get government support out to those who are most in need became very difficult because so many Jamaicans are not part of the financial network, and also because a lot of the banking is still not digitized. And that is one of the objectives that we hope to cure with the central bank digital currency. Looking a little bit more strategically down the road at growth, I think that the usual suspects of what it is that impedes growth in Jamaica remain. For example, there is still further work for us to do in improving the business environment and boosting competitiveness. There is a lot of work to be done in reforming criminal justice and trying to get a handle on crime. Certainly, access to financial reforms, access to financial system. We need reforms in that area. And of course, any strategic and targeted investment projects would certainly help to boost growth. But I think that for me, a main concern is that we need to improve the quality and productivity of Jamaicans. Although over the last 5 years, maybe longer, we have been creating quite a few jobs. The jobs are essentially low value added jobs, and therefore the impact on GDP is quite constrained. And I think that's one of the reasons why we can't get over that 2% hurdle. We need to step back and take a medium-term look at this problem. What we need is to start producing cohort after cohort of highly trained Jamaicans in the fields that a modern economy demands the most: science, technology, that kind of stuff. But to do so, we need to start with the foundations. We need the institutions, we need the teachers, the curriculum, And then we need to start recruiting, preserving those students in the institutions, and eventually turning them out year by year. It's a long process, but we have to start somewhere. And if you just look around at countries of our size and with our kind of resources, our natural resources, you see that the level of education and the value added that citizens bring to the table is greatly enhanced when we have much improved educational set of institutions, and we produce graduates that are far more productive. So I want to commend that to the government of Jamaica, and Bank of Jamaica is of course more than prepared to play its role in that respect. Inflation, we intend to keep it low and stable and very predictable over the medium term. The financial system, sound as it is now, we intend to be very careful to make sure it stays sound, and we expect to help in making sure the country's debt levels are at sustainable levels. We really want to encourage the private sector, as they have been, to continue to be proactive in seeking out opportunities to innovate and to encourage greater economic activity. We're all working together for recovery of Jamaica. Thank you, ladies and gentlemen.